welcoming everyone again. Thank you for joining us here. In particular, welcome to our colleagues in Barbados and the OECS. Welcome to our presenters. Great to have you on board. We have been joined, I think, by persons from Barbados, the OECS, from Trinidad, Guyana, Jamaica, from Europe, and I think from USA. So we have a truly international audience here this morning. So welcome again. This event is the third in our series of roadshows. CARAIA, was started just about 2 years ago, November in 2019, just before the pandemic. It was our intention that come 2020, we would have done a series of roadshows on the ground in Barbados, in different countries in the Caribbean. Obviously, that has not been done. COVID took care of quite a lot of things, that being amongst them. So we've been doing these roadshows virtually. We did our first one in Trinidad, and we've done one in the Dominican Republic. So now this one is in Barbados and the OECS. So it really is our pleasure to be here this morning. Although the Development Bank of Jamaica has done quite a bit to develop the ecosystem for private capital and entrepreneurship in Jamaica, what our intention has always been that a public sector institution cannot run the private capital markets in the same way that the public sector doesn't run the banking markets or the securities markets. So the leadership from the private sector has been always on the cards. So CARAIA really represents a handing over of the leadership of the private capital markets in Jamaica to the private sector. No, I said in Jamaica, but one of the things that we recognized was that many of our fund managers, as well as our entrepreneurs, they don't have just a Jamaica outlook. They have a regional outlook. So if we're going to be building the private capital markets, we have to have a regional outlook, and we want to be able to engage regionally. So this is what the Caribbean Alternative Investment Association is all about. So at this time, we want to be able to introduce our current chairman, our first and still current chairman, Christopher Williams. I'm sure everybody knows Chris. He's certainly been traveling across the Caribbean. Chris, as you know, is president and CEO of Proven Management Limited. And of course, Proven has significant funds under management and has invested in key sectors across the Caribbean. So it's my distinct pleasure, Chris, to ask you to bring the official welcome and share your opening remarks with us.
Thank you. Thank you, Audrey. Good morning, everybody, except for probably Barry. Good night, Barry. This is a watershed moment for us in the Caribbean. The reality is that the intermediation space has not been able to deliver the kind of unlocking of capital that we would like to see. In fact, just recently, I was in Barbados, and Mayor Motley, Prime Minister Motley, made a speech where she was extremely concerned about the fact that the loan to deposit rates were in the region of 50%, and that in fact banks in Barbados were even looking at charging for deposits now. So that presentation, as well as the fact of the loan to deposit rates, as well as the reality on the ground that we face, as that entrepreneurs face, has demonstrated to all of us that there are some significant concerns with the intermediation business model that, that is centuries old. And the global first world markets have evolved significantly over the last 50 years. And they have evolved to widen the ecosystem to include, obviously, the securities market, the publicly traded securities market, and of course, the private capital market. We, on the other hand, in the Caribbean, have not seen the same level of widening of the financial ecosystem. And the time is now. This is our Waterloo. This is our time to create a revolution in the financial ecosystem space. And we need to aggressively, kick down the walls and ensure that we are in a position to widen and satisfy the entrepreneurial desires that are out there. And that's what we're about at CARAIA. We are extremely passionate about ensuring that the private capital market steps forward and becomes a legitimate player in the space. And today is another chance for us to speak about it, to speak about the opportunities that evolve from it, and to speak about how we can learn from each other and in fact take advantage of this opportunity. Certainly from my seat in Jamaica, we've seen a significant evolution of the private capital market. We've seen the establishment of a number of funds, and that establishment continues to drive entrepreneurial desires. So let's have a great chat. Thank you for joining. Wish we were there in person and we could break bread together. Unfortunately, we're still going through these challenges, but let's still participate and have a rigorous discussion this morning. Welcome.
Thank you, Chris. Okay, so what we're about to do is we have been messages we have received. I think we indicated on our agenda that we would have two messages, one from Prime Minister Motley and one from His Excellency Dr. Didacus Jules from the OECS. Unfortunately, Prime Minister Motley's message has been delayed. When we do receive it, if we receive it during the event, we will certainly play her message. If not, it will be put on our social media, so we'll be able to share it with you. At this time, it's my distinct honor to have received the message from His Excellency Dr. Didacus Jules, Director General of the Organization of Eastern Caribbean States. So I now invite you to listen to Dr. Jules's message.
Prime Minister of Barbados, the Honorable Mia Amor Motley, President of the Caribbean Development Bank, Dr. Jean Leo, CARAIA Chairperson, Mr. Christopher Williams, Director, Mrs. Audrey Richards, distinguished friends. Investment funding is the irrigation system that grows a vibrant culture of entrepreneurship and lays the basis for a shared prosperity. Conversely, the absence and unavailability of capital for small, medium-sized businesses has been a persistent fetter that has historically throttled the entrepreneurial potential of those who aspire to a better life. The irony of that reality is that capital has never been as scarce as we've been led to believe. We have been acculturated into the myth that funding is scarce and unavailable. Our banking system evolved from the plantation economy, has maintained its hegemony in our economy, serving as a financial bulwark that reinforced dominant interests. Credit unions and indigenous banks emerged from the efforts of a post-colonial generation to mobilize grassroots and community resources to carve its own economic independence. In the contemporary era, the banking system maintained its financial hegemony, accumulating billions of dollars in savings that were largely on lent for consumer spending, but insufficiently for investment purposes. Only recently, I listened to a brilliant expose by Prime Minister Motley, in which she exhorted the banks to stop securing money and start investing. Savings at low interest with spending at higher interest in drought conditions for investment effectively cripples the growth opportunities of our local economies. In this context, it is a pleasure to participate in and be associated with this roadshow by the Caribbean Alternative Investment Association, a construct that emerged from the efforts of the Development Bank of Jamaica in association with 16 and now 20 major corporate and institutional players in the Jamaican, Guyanese, Trinidadian, and regional private capital markets. And the OECS Commission is proud to associate with such an effort that is an assertion of our will and determination to fuel our development by harnessing our own resources. The core objective of this initiative is, I quote, the expansion of private capital networks throughout the Caribbean as we seek to solidify the region as an important investment destination and to expand the expertise and encourage best practices among the players of the investment community, end of quote. The convergence of crises that have assailed us has laid bare our vulnerabilities on all fronts: economic, health, geographic, climatic, and social, and at all levels, from the regional to the national, to the community, to the elemental construct of the home. And so we eagerly welcome this roadshow to familiarize the people of the OECS and Barbados about this laudable initiative. The roadshow is a first step to getting to know and to better understand the promise and the potential of this effort so that we can explore the productive partnerships that it presents. As we seek to operationalize the OECS Economic Union and enable the free movement of people, goods, services, capital, and ideas within that space, and articulated within the wider CARICOM arena, access to capital to irrigate the seeds of entrepreneurship and to grow our economies through our own collaborative endeavor is imperative. We welcome the roadshow by the Caribbean Alternative Investment Association, and we look forward to planting deep the seeds of indigenous industry adequately irrigated by the flow of indigenous capital. Welcome, and I thank you.
Oh, sincere thanks to Dr. Jules for his gracious message. We certainly endorse what he's saying in that we believe that there's no shortage of capital. So what we need to understand is where and why is it not being deployed. So on that note, I will just take the next few minutes to just share with you some information on CARAIA to further introduce CARAIA to our audience. So who are we? The Caribbean Alternative Investment Association, ladies and gentlemen, is a regional nonprofit association. It represents the interests of the alternative investment industry in the Caribbean. I think Chris, as well as maybe Dr. Jules, gave some indication just now of the need for non-traditional financing. I believe most of us have grown up pretty much on bank loans, perhaps some listed equity and bonds and so on. But we recognize that capital is trapped. Capital is not going where it needs to be going. So what the non-traditional markets, the private equity, venture capital markets, and so on, these markets have been a source, these private capital markets have been a source of funding in many other countries, and it's demonstrated the impact that that has had on growth and development. I know certainly in our region, GMB Group would not exist without venture capital funding, which they received probably nearly 30 years ago. Similarly, we're all familiar with the Googles and the Facebooks and Amazons of the world. All of these have received non-traditional funding. So why alternative investments? As noted, and I think Dr. Chris actually spoke to it too, it's an expansion of the universe of financing options for business, well beyond, in fact, several times beyond what is available in the traditional markets. Alternative investment markets provide smart and patient long-term capital. Smart in that it's not just about the money, it's also about the advice, the networks, the value that is created, the value that is provided to the investee companies by these investors. It's patient in that it's linked to the needs and particularly the cash flow needs of the company. So we're not investing and expecting immediately the repayments to begin. So, and it's long-term. A lot of the funding comes out of pension funds, and they have an appetite for longer-term funding. Tailor-made funding, it's adapted to the needs of the investee companies. So we have venture capital funds, which are at a higher risk end, but certainly that's the appropriate capital for startups. So when we hear a lot of a discussion about banks not funding startups, the bank source of capital is not really what's appropriate for funding that kind of investment. So the venture capital or private equity, private credit funds, these fund managers have distinct strategies, and these distinct strategies are earmarked the kind of investments in which they're interested. A private equity growth fund might not necessarily be funding an early stage startup business, but certainly a venture capital fund manager would probably have that appetite. No, as noted, there's a demonstrated impact on economic growth and development, and we've seen that in the Caribbean, and we've certainly seen it globally. So alternative investment funding sources, as I mentioned, include a lot of our institutional investors, pension funds, insurance companies, those with long-term capital, and a number of our corporates, family office, sovereign wealth funds, and high net worth individuals. Development finance institutions usually are a big player in the markets. The thing about development DFIs, though, is that they tend to look for size. So if one of the things that we will have to be looking at in Jamaica, not in Jamaica, but certainly in the Caribbean, is the size, the type of funding, the funds that are being raised in order to attract international funding, also funding from the DFIs. So why CARAIA? I mentioned earlier that CARAIA came out of the Development Bank of Jamaica's Jamaica Venture Capital program. This program acted as a catalyst for the private capital and entrepreneurial ecosystem in Jamaica. What we found is that most of our funds that we've invested in have a Caribbean perspective. their strategy spans Caribbean as well as Central America. So we really, CARAIA now was formed to undertake a lot of the work that was being done on the private capital, under the Jamaica Venture Capital Program. Why? Because as a private capital markets, and I might have mentioned it's earlier for those who were on, as a private capital market, we believe that the private sector needs to have leadership of this market, not a government entity. We certainly don't lead the banking sector. We don't lead the insurance sector. So we believe that the private investors, the private sector needs to promote and champion the private investment in the Caribbean. So CARAIA really represents the private sector assuming leadership, assuming ownership of this, of the growth and development of the market. And as I also mentioned earlier, entrepreneurs and investors, they're not staying in their own country looking for opportunities. They're looking for opportunities across the region, and some of them are looking for opportunities globally. So the CARAIA as an association, the growth and development, the enhancement of the opportunities throughout the Caribbean, it's a big mandate for the association. Now, I just wanted to share with you some of our, we're not a unique entity. CARAIA has followed the lead of a number of other associations, some of them in our region, some of them globally. ABVCAP is the Brazilian private capital association. Cole Capital is the Colombian. And I just let you know that in establishing CARAIA, we certainly took a lot of lessons from ABVCAP in what they have done in establishing their association. So we have used that as our template for establishing CARAIA. Of course, globally, there's the African Private Equity and Venture Capital Association, which has a continental perspective. There is, again, in the region, there's a MEXCAP from Mexico Private Capital Association. LAVCA and GPCA. LAVCA used to be called the Latin American Venture Capital Association, is now the Association for Private Capital Investment in Latin America. And through the DBJ, we have been members of LAVCA for quite a few years. So although LAVCA has a regional approach, we thought that it was important that the Caribbean, our needs in the Caribbean, we want them to be front and center of an association. So this is what CARAIA is going to bring. Also, the GPCA, which is the Global Private Capital Association, that used to be called the Emerging Markets Private Equity Association. They changed their name either this year or last year. So GPCA is also a global entity that we have been a member of. And of course, the British Venture Capital Association has created a number of lessons for us. So CARAIA, as I said, is not unique, but what we're doing for the Caribbean, we believe, is unique. So what is our vision for the Caribbean? We believe that we can achieve sustainable and robust economic growth in the Caribbean and Central American region through long-term investment. And I think when we listen to Dr. Jules's message just now, I think what we recognize is that we have been too limited in the access to capital, the types of capital, and certainly not the long-term patient capital that is needed. I've included Central America here because, again, the funds with which we are associated, they all have a regional approach, and region, not just the Caribbean, but certainly Central America, a lot of them in Panama and Costa Rica and so on. And we believe that it's just a matter of time that we will be engaging with our Central American neighbors, because this is something that impacts us all. So our objectives. Some of the work that we did under the JV Capital program was we did quite a bit of training and knowledge building through conferences, workshops, and so on. This is going to be part of CARAIA's mandate, and we have been undertaking quite a few training programs for our, particularly private equity training programs for our stakeholders. And these stakeholders are not just fund managers, but most importantly, our investors, our pension funds, our pension fund trustees, or insurance companies. They have to have a clear understanding of the differences between investing in a listed equity as opposed to investing in, say, private equity, and the responsibility that comes with that, and the knowledge that is required at their end in order to ensure that as stakeholders, they are on top of what is happening with their investment. So there's a lot of training that has to be undertaken. We believe that regional institutions need to adopt global best practices. Although we're islands, we're not on, if we really want to be taken seriously across the globe as an investment destination, the Caribbean. I know when I go to international conferences, the Caribbean is there as a few little dots. You fly over to go to Brazil, you fly over to go to Mexico, or maybe not Mexico, but certainly the larger countries. We believe that with 44 million people, the Caribbean can make its mark on the global stage. So we need to develop our alternative investment markets. They need to be dynamic, they need to be visible. And most of all, we need to demonstrate that they can impact innovation and job creation in this region. Data is critical. Nobody knows what's happening across the Caribbean. I don't know what private equity transactions are taking place in Trinidad or in Barbados. And I'm sure most persons in the Eastern Caribbean probably are not familiar with what's happening in Jamaica. It's going to be critical. We don't know what's happening in the DR. So if we're really going to be a regional, taken seriously as a regional hub for investments, we need data. So this is one of the objectives of CARAIA. We also have an ongoing, we also want to be able to enhance regional collaboration. It certainly was very, it was good this morning when we started, and there was a lot of cross-regional bantering and networking. We need to enhance that across the region. CARAIA right now, I just saw a message, I'm just gonna pause quickly, I just saw a message coming up in the chat. CARAIA is a regional association at this point in time. We do have members who are outside of Jamaica. I'll come to that in a moment. We believe that market development requires advocacy to change certain, maybe certain legal or regulatory things for the better. One of the things I would mention here is that we lobbied the stakeholders in Jamaica, really, before CARAIA, lobbied for the changes in our investment regulations for pension funds to allow for pension funds to invest in this asset class. Globally, pension funds invest 20–30% of their assets in private capital. In Jamaica, we have just, the regulations were just changed to allow pension funds to invest 5%. We are still advocating for larger amounts, but certainly it is a start. And we believe that, across the region, the sharing of case studies on what's happening, the sharing of case studies on what's happening globally, and advocating for market development is going to be one of the mandates for CARAIA. And as I mentioned just now, as a region, we want to be taken seriously. So we have to continue to develop our international linkages. and to access funding opportunities, not just in the region, but outside of the region. So what are some of the activities? As I mentioned earlier, data is critical. So we've developed a proprietary database portal, and we're going to be collecting information on transactions from our private equity funds, private credit, mezzanine, infrastructure funds. We need this data to be able to collate that data for, in the region, locally, regionally, internationally, it's for it to be clearly understood that the region, things are happening in the region. And for people, without that kind of data, the growth is not going to be what we really want it to be. Of course, I mentioned the training and capacity building, research, the networking opportunities through conferences, workshops, technical meetings, promoting innovation and proper governance and transparency. And we're going to be benchmarking against global best practices. And of course, being in the international forum to build the visibility and voice of the region among global capital markets. So we believe that CARAIA needs to create value for its members. Our members are listed on our membership portal, and that gives them an opportunity to showcase to a wider local regional and global audience. Members will have proprietary access to some of our resources, including some of our data, research data. We will provide some publicly, but we believe that members should have some proprietary access to that data once we begin to build our database. Of course, the networking opportunities and peer-to-peer exchanges are going to be important because this helps access to investment and fundraising opportunities, as well as sharing best practices within the region and with our colleagues outside of the region. Of course, members have the opportunity to showcase their profile through thought leadership, sharing that within the region, and opportunities to engage directly with policymakers. We've had a number of fora over the last 2 years where we engage directly with influential policymakers to have discussions with the members. Discounts at association events are, of course, always welcome. And eventually, we will certainly have our awards and recognition for our members. The member categories include full members, and this category usually includes our fund managers, institutional investors, corporates. We've had associate members, angel investor network, family offices, and professional service providers, accountants, attorneys, and so on, as well as we have had affiliate members. Our member profiles. We have our founding members. These are our founding members. Most of them are Jamaican or regional. They have a Jamaican or regional footprint, certainly, as well as a global footprint. So some of our Jamaican entities, the ICD group, proven, and well, I can't even say Jamaican because most of these entities do have investments right across the region. We do have some international funds, MPC Capital out of Germany, as well CEF, which is a global fund. So our founding members represent quite a number of global, regional, local, regional, and global members. Since then, we have added some newer members, and that includes Aspire out of Aspire Fund Management from Trinidad. First Angels Jamaica is Jamaica's first angel investment network with just about, I think maybe near 40 members in Jamaica and the region. Economic Development Fund of Ghana, of course, University of the Commonwealth Caribbean. That's pretty much what I wanted to share with you this morning about CARAIA. There's a lot more information on our website. Please follow us, our activities on LinkedIn and and on Facebook. Certainly our next training sessions, we'd love to be able to see a large number of persons coming out of the region who take part in our events. And so we look forward to hearing from you. Thank you.
Morning, ladies and gentlemen. Thank you for joining us this morning. My name is Justin Nam, the General Manager of Epley Limited, which is a Jamaican listed investment company and fund manager. I know that we're joined by people from all across the region, including from Barbados and the OECS. Welcome, welcome, welcome. It's lovely to be sharing with you this morning, and we're looking forward to when we can actually meet again in person. But I'd like to commend Audrey and the team for organizing this virtual roadshow today. I'm sure you'll all agree that we have heard some insightful remarks from Dr. Jules. You know, Audrey has expressed CARAIA's vision in her presentation a while ago. And we would all agree that deepening of the regional capital markets is necessary. As Chris mentioned earlier, private capital really needs to step forward. And during our session this morning, we'll discuss ideas about how alternative investments can continue to shape new opportunities and outcomes in the Caribbean. I'm going to begin with a brief introduction of our panelists, which will be followed by our panel discussion and then a Q&A session. We're going to ask you to type questions. I think some of you have already availed yourselves of the technology to do that. Audrey will be fielding the questions, and we're looking forward to your thoughts and feedback. So please utilize the chat box. And we're going to try to conclude everything within about 35 to 45 minutes. As you know, we as a region and globally, we've been hit by an exogenous shock through COVID. And as we look forward to life beyond the pandemic, we'll have to continue to adapt to the new normal by pursuing untapped investment opportunities. Today, we're going to learn from our distinguished panelists about innovative perspectives, positions, and strategies that they have applied across different sectors within the alternative investment space. So I'd like to introduce you this morning to Barry O'Brien, who is a co-founder and managing director of Williams Caribbean Capital. His experience spans a number of sectors such as renewable energy, tourism, sustainable food packaging, and digital financial services. Simone Hudson-Bernard, who is based in Jamaica. She's a CFA charter holder, assistant vice president at NCD Capital Markets, and she's been responsible for establishing and growing the institution's alternative investments platform. Mr. Gregory Hill out of Trinidad at Answer Merchant Bank, he has almost 3 decades in regional and international financial markets, and he will share some of his views, as I think he's uniquely positioned to speak from the perspective of the traditional financial sector this morning. As an alternative manager ourselves, we at Epley have found that there is strong demand for alternative investments, particularly in the infrastructure and mezzanine space, and we have increased our focus on these areas. And we think that alternative capital really has huge potential to address some of the biggest problems facing the region. As we all know, the governments have less fiscal space. So this forum, I think this morning is extremely timely and relevant. Barry, I just want to welcome you again and ask you to share with us your experience of how Williams Caribbean Capital has utilized alternative financing, and just give us an insight into the potential for this in Barbados and the OECS and generally just the wider Caribbean.
No, thank you, Justin. No, and I want to say good afternoon to everybody. I'm in not so sunny Dublin at the moment at 2 p.m. over here. So yeah, just in thinking what I was going to say here, I mean, what I'm going to really just talk about is a little bit about Williams Caribbean Capital and how we've grown this business using alternative funding financing models. Mm-hmm. And I mean, I've been through the other sort of institutional and multilateral sort of funding models from my days of heading up Digicel in both Jamaica and in Barbados. But it's just interesting to see. I suppose it might be of interest for people to hear what we've done and how we've unlocked some of those private capital markets and things, and sort of funding tied up in banks actually into to be used in alternative financing. So what we are, WCC, we were founded in late 2017, and we're a renewable energy asset developer, and we're also an impact investment company. What that means is we're developing renewable energy projects and also a semi-private equity type business as well. But on the renewable energy side, how we've been funding this business is via the issuance of certified green energy bonds. And what a green energy bond really is, it's really just an ordinary bond. The only difference being that the projects that it's going to invest in, those bonds have to be certified as being green. And when we got into this back in sort of mid 2018, we did a bit of market research, and we found that there was a lot of appetite for these types of alternative financing type structures and investments, and nobody was doing it. So, but the feedback very much was, the way to get anything off the ground that I've seen in the Caribbean really is to sort of follow global best practices. And why reinvent the wheel? We looked at other models that have been out there, globally, and we came across an organization called the Climate Bond Initiative, and they had issued over $1 trillion US worth of bonds. Well, why issued? I mean, certified by other issuers. Hence, the path we really followed on this, and I suppose that anybody can follow really, is that we identified the projects to begin with, and then prior to any of the bond issuances, we got our projects and our bonds verified by one of the largest, well, it's actually the largest US ESG rating agency, a company called Sustainalytics. And they verified basically that both our bonds and the projects conform to various aspects of the green principles of the International Capital Markets Association. And a lot of those principles have to do with how we selected the projects, how we're going to report on the projects. The reporting being both sort of GHG, greenhouse gas reporting, and also sort of financial reporting. And this reporting had to be done and verified both pre-issuance of the bond and then annually post-issuance of the bond. So then, armed with that verification, we went to the CBI, the Climate Bond Initiative, which is a London-based organization. And they certified then that our projects and our bonds conform to various aspects of the Paris Accord. Again, there's a lot of paperwork involved in this, and you do have to structure the projects in certain ways. But the international markets, for all intensive purposes, are expecting these types of verification and certification processes. And the final part of the jigsaw then has been more recent in that the IDB has a green bond transparency platform for the LAC regions. And we also got our bonds listed on those platforms. So then, armed with the listings, the verification and the certifications, we went to market, and we did our first issuance in, I think it was May, June 2018. And that was for 12 million to begin with, the first one. And the market really, this is in Barbados now, by the way. So they were primarily PV solar projects and rooftops in Barbados. And the market didn't know what to make of these, but we did, we did show them that we had all these international certifications, and hence we sold the bonds initially to people like family offices, high wealth individuals, and roll on another 5 issuance later into sort of 2021. And we're now selling these bonds primarily to financial institutes, to pension funds, insurance companies and things. And I think the last issuance we did, it took us all of 3 hours actually to be fully subscribed. So there's a big appetite for those.
Amazing. Congrats on that.
Yeah, I mean, the real big point I'm trying to make here is that, if you set something up with international standards and sort of international best practices, there is a big appetite for such alternative financing models and investment type models. I mean, we were selling these bonds sort of between 3.25% and 5%, and which was cheaper financing than we would have got from many of the financial institutes at the time. And we obviously did approach the banks who had, their usual. Not trying to criticize the banks here, but the interest rates were higher basically, and they were looking for things like personal guarantees and things. This method quite worked very well. And on the private equity side, I mean, it was similar enough. We went out there with a fairly set structure as well. We raised money, we invested in things in Jamaica like VIP Attractions and Trinidad SCG Growth Partners, and then we moved it over here into Ireland where I am presently, and using LBO type models. we managed to, I suppose, raise substantial money and invest it into businesses over here, such as sort of substantial food packaging businesses in the sustainability space, such as Irish Flexible Packaging and FizzPack. And actually, only yesterday we signed a major deal actually with Pixar private equity out of Ohio, and the point being again here that was structured in a sort of a very standard vanilla type way, showing that, you know, the appetite is there for these investments if you structure it correctly. And we're actually there to advise actually anybody on this as well, because the interesting thing from our perspective is that we're still the only company out there in the Caribbean that's gone down this route of sort of certified bonds. And people might say, you know, they're just not interested in sort of renewable energy. But the actual taxonomy, if you look at the actual CBI site, that's the Climate Bond Initiative site, is very, very broad. It's everything from waste to water to transport, right into construction actually can be certified as being green as well. And what it does is, for the investor perspective, especially from a European and US perspective, a lot of investment companies, pension funds have mandates to invest into green. And as soon as they see the CBI certifications and international capital markets associations verifications, they don't have to do any due diligence. That's good enough for them. It ticks the box. These are green projects. A lot of companies have mandates for certain percentages to be invested into green. And you're typically getting anywhere sort of between 50 and 100 basis points off the interest rates you would typically pay on ordinary bonds as well by these just being actually green. So that's really the sort of story from WCC, and just proving the point that huge appetite, you know, probably in the order of 2 billion of trapped sort of capital inside the banks in Barbados, waiting basically to invest in things, and to just structure it correctly, and it will happen.
Great, well, thank you. And how have you found it sort of breaking that sort of rigid hierarchy within some of these financial institutions and trying to get them to understand what it is that you're doing?
Well, I mean, we actually bypassed them completely to begin with. We went to market to use the banks. I mean, you know, when you knock on the bank's door and you sort of say you're doing renewable energy projects, the first thing you get is, you know, we want personal guarantees and security. So that's why we went to sort of the bond markets, to high wealth individuals, family offices to begin with. But now, as we've got a proven track record and we're audited by PwC and things, and we've got sort of annual post-issuance certifications on the CO2 offsets and things as well. We've got the financial institutes now who are buying our bonds. So rather than us actually lending money from the banks, it's the banks are buying our bonds. So it's worked out well in that perspective. It took a little bit of time, obviously, because everything does to build the credibility. But I think what we've done is we've built the credibility for actually anybody else who goes down that road of looking at certified bonds as well. The model has been proven to work.
Great, and I think it'll be good now to hear from Gregory as to, you know, how he thinks that traditional financial institutions and alternative investment managers can work together to, you know, confront some of these challenges and overcome them, as the region has been, you know, I guess somewhat slow to adapt.
Thank you very much. It's a pleasure to be here with the esteemed panel and viewers. And again, you know, our thoughts and prayers go out to all those that have suffered any loss due to the pandemic. And we're wishing for a speedy recovery for all economies and families across the region. Thank you very much. Very good question, Justin. I mean, the traditional banks have a role to play in not only stimulating the recovery post-pandemic, but also supporting the growth of you know, the alternative investment classes. And let me first of all say that the role of traditional banks really serve a purpose for the safety and soundness of the banking system, for the transmission of payments and giving credit. Moving into the alternative asset classes, it requires a different capital structure, different funding structure. So, you know, with no doubt, then there is a need to gravitate from the expectation that the traditional banks will fill this space. They're not designed to do that. They need to have liquidity for funding on demand, whereas the more complicated projects require private capital, require long-term funding to be locked in place. You know, but having said that, there are a lot of things taking place. I mean, in response to the pandemic, we've seen the traditional banks step up. They've digitized their processes. They're looking to enhance the payments. Traditional banks like us, we've done $250 million in supporting sovereign-backed funding to deal with the post-pandemic fallout. So that's one way of us stepping up and providing that sort of capital required and mobilizing capital from investors that require a little less liquidity, but not as long-term capital as the alternative markets would require. So there is a role for the traditional banks to play in this particular space, both from arranging capital for projects that require, liquidity does not tie up for that length of period, but providing pooling of capital for short-term needs as well. So when you structure, an M&A transaction, infrastructure project, you require all different tenors and varying types of liquidity for any one project. And the banks could fill the role of providing the operating lines, the short-term commercial paper, 1 to 2 year funding, whereas the private capital and the alternative investment asset classes can do much longer tenors. So that's the way I could see both parties coming together to contribute to getting projects done.
Understood. And we have Simone here. Simone and I recently have been working in the mezzanine segment of the market together. But Simone, what other sectors do you think require this type of flexible capital that alternative investments offers? I see where you have established a tourism-focused fund recently. Could you give us some insight into that?
Sure, Justin, and good morning, everyone. For Stratos in particular, we are very bullish on industries or sectors that contribute significantly to the fabric of the economy. So as Justin mentioned, we would have recently launched our tourism response impact portfolio, and for short, we call it TRIP. And that seeks to provide that flexible capital to an industry that has been significantly impacted by COVID, right? And a number of industries or a number of businesses have been challenged by the current economic environment and just need this flexibility in financing or this kind of bespoke financial solution to help them, to tide them over in this particular period. We look at infrastructure as well. And a number of studies have been done to show that, the lack of investment or failure to add additional capital to the existing stock is very costly in terms of economic growth. IDB actually suggests that it costs LATAM about 1 percentage point in economic growth annually if we fail to add to the existing capital in terms of infrastructure. And that cost actually increases significantly if the financing gap persists for over 15 years or so. So we are very bullish on providing financing to these critical industries or these critical areas. We see where technology has played a very good role in terms of helping us to manage in the current, what we call new norm. And, businesses focused on technology or just including technological investments in the current construct will actually result in the benefit as it relates to economic growth. So we are bullish on particular sectors. You mentioned tourism, I mentioned infrastructure, and we see where there is some amount of benefit in looking at companies focused on technology and technological improvements.
Great. And Barry, so you mentioned that you're in Dublin at the moment, and we're just trying to understand, maybe you could give us your perspective on how the Caribbean can attract more inbound investments. As Audrey mentioned, some people don't even know about the Caribbean. It's not on their radar at all. Is there anything that you think we could do to sort of tap into that capital, which is seeking to obtain yield, which is probably very accessible here in the Caribbean, precisely because of some of these inefficiencies in the market?
Yeah, I have looked at and talked to some of the sort of the VC and equity guys over here about potential projects in the Caribbean, and it's curious that, sort of even in a small country like Ireland, we know very little about the Caribbean, and we typically bypass it and go straight to the States or into Eastern Europe and things. So, and it's really just getting that sort of, it's very hard for them when they look at the size of some of the projects, because the projects typically in a Caribbean perspective are fairly small relative to the sums of money that a lot of the hedge funds and bigger sort of equity funds, your Blackstones and BlackRocks are looking at it out of the markets over here. So, and it's also, outside of the sort of the Portland's improvements type of stuff, where you do get maybe some bit of structure and what you would consider some size of scale in private equity, it's just not attractive enough. So we need to get some scale into things to make it more attractive. I mean, they're very different sort of financial eco type systems between sort of over here and over in the Caribbean. It's the banking systems, I mean, are so different as well in that, I mean, I was sort of very surprised when, I came back here and found how easy it was actually to access capital from the likes of the banks as it would be opposed to in the Caribbean, in that the first deals we did here on sort of, 70-30% debt to equity types of LBO type of models, we were borrowing money at sort of 2.5% type of funds and things, and they were allowing us to go up to sort of 4.5 times debt to EBITDA with sort of debt service coverage ratios of sort of 1.2 and things. Very, very different model. And even though there's a massive alternative sort of financing market over here, it's easier to get money out of the banks too. And the concept that I always found difficult in the Caribbean was every time you look for money, no matter, even if you were sort of buried down in some sort of a holding type structure, it came back to personal guarantees, which is never a question that comes up in this part of the world. It's just assumed there's going to be no personal guarantees. That's why we've got corporate limited structures and LLCs and things. So, it's getting those models right and things. And, over here we expect, we sort of base ourselves some way on some of the American structures too. We look at, I suppose, in the private equity side, we look at your limited partnerships or general partners, or, your 220 type models, that general partners run it, and 90+% of the funding's coming from the limited guys. And, we're taking that Delaware type of LLP type structures and converting it into sort of European type structures. And you don't get an awful lot of that available in the Caribbean. That's very clean, basically, for sort of the average type of investor over here, or the average sort of financial type investor. So maybe it goes back some way and ties into what I said earlier. It's making things as expected and as vanilla as, I suppose, the rest of the world would expect it to be. Because in certain respects, we copied the Americans, who are, I mean, we didn't reinvent the wheel either. And even on the bonds I mentioned, we didn't reinvent that wheel. We just copied what was happening elsewhere.
Understood. Thank you for that. And Simone, I don't know if you could tell us, how do you go about identifying deal flow at scale for some of these funds that you manage?
Yeah, so of course, origination is an important part of the investment management process. You need a constant deal flow in order to maintain the returns that you'd have promised to investors. And so luckily for Stratos, I think the advantage that we have is that we are part, well, it is managed by NCB Capital Markets, which is a regional entity, and we employ what we call a hub and spoke model. So we have our investment banking tentacles strategically placed in different parts of the region. So we have a hub that focuses on the Northern Caribbean, Southern and Dutch and Eastern Caribbean, right? And so those hubs, hit the ground in terms of looking for deals for NCB Capital Markets and for Stratos, right? We have relationships with different entities. So you mentioned that we have been partners for a long time, EPLI at NCB Capital Markets, and EPLI as well, is well known in the region and helps with the origination, certainly on the Caribbean mezzanine fund management. So it's a different relationships that we have and how we are strategically positioned as part of a larger group. That helps with the deal flow. And certainly as the word goes out there about, the objective of the alternative investments platform or these vehicles, well, on a number of occasions, we have businesses, coming to knock on our doors, asking, what can you do within the current economic climate, given that, traditional lenders are not able to meet this particular need. And we get deal flow from that as well.
Understood. And so, Gregory, from your point of view, do you find opportunities where you may have regulatory constraints, where you have a great client, but you've hit your concentration limit, or maybe your client wants additional debt, but they don't have any more assets that they can give a first lien on, and maybe you could refer or partner with some of these alternative managers to provide an opportunity for them to provide, for instance, second lien debts or any other alternative flexible structure which may be outside of your realm. I don't know if you've seen anything like that from your point.
Yeah, I'm really excited by the question and the discussion. I have to say, I see that every day. I see that across the region for the last 25 years. There are great projects, great corporate entities just awaiting issuance, and all they're missing is a sliver of additional equity or mezzanine financing to make the numbers a little more balanced. I spoke earlier about the difference between traditional banking and alternative investing, and why both are funded and structured differently, because they have different needs and serve a different purpose in the economy. But having said that, Barry raised a good point about scale. It's going to be difficult to attract the BlackRock from around the world based on the size of the deals we have, and therefore it's important and critical that we come together, both the traditional banks, the merchant banks, and the alternative types of investments, to be able to get projects done in our region. And it's really up to us to step up now and to pool these projects together, pool the capital together, layer the debt and equity structure in a manner that's suitable to all of the particular participating investors, be it traditional funding, alternative investment class, mezzanine, pure private equity. So everyone has a role to play in coming together. So why has it not happened in the past? We have to ask that question, and how can we solve it today? Because it's really up to us to be able to make that change, and make that change now, because it hasn't happened for the last 25 years. I've had the privilege of being involved in large projects. Just taking it home to Jamaica, been involved in Highway 2000 in 2000, which is 21 years ago, to working on PPP projects in Barbados just 2 or 3 years ago for the Water Authority, or Coast Guard project, which would have been 15 years ago in Barbados. So wherever you take it, funding for JPS, for power, or in St. Lucia with Lucilec, as the case may be, there's opportunity for, and I've looked at opportunities for financing projects around the entire Caribbean. And in every case, there's always a need for a better structured deal, which involved the use of a mezz level type of financing. So I was very happy to see the guys in Jamaica launch the mezz funds, and of course the private equity. And the issue of scale is important. I'd like for us to address the issues today so that we could, ventilate them, force the conversation, and then drive the change that we need. Because I'm not getting any younger, and I'm seeing so many projects that are still on the drawing board waiting to happen, right? Nearing 3 decades in this space. So what I'd like to just point out a few points. So one, the exit strategy. If you tie private capital into some of these projects, there must be an exit strategy. If there's a well-defined exit strategy that provides clear data around the valuation of the investment, you're going to find that institutional investors in the region are going to be a little bit skeptical to tap capital when there's no clear exit strategy. In Jamaica, the junior stock market is doing really well, but when you look at the rest of the region, the other markets are not very active. So again, the conversation of having a common exchange always comes up, because we need to get scale and the level of liquidity required. Perhaps we could come up with an exchange that deals specifically with private equity type of investments. Now that would give investors, family offices, institutional investors the opportunity to exit at the right time. And perhaps some of the traditional banks may want to come in the early part of the transactions and exit earlier to the longer hold type of investors. The second item that I feel very passionate about is regulatory framework. Very often, and the guys from MPC would have flagged this, trying to raise capital in a private equity structure or a collective investment scheme requires, in many cases, regulatory oversight and approval. And entering these markets to access funding when the regulators are not in tune with the type of structures and understanding of the risk and the type of investors being targeted. And that causes extensive delays. And as you know, capital has to move within a time frame. And sometimes the process can be quite long. And very often, I've seen many global investors willing to come and bring FDI to the region, just awaiting local funding to partner with their private capital from abroad. And the projects stay on the drawing board because the regulatory process takes very long. So we need to put that on the table as well, and try to move in the direction that allows capital to enter the market, but also wider participation from the public in that space. So I just wanted to throw the cat among the pigeons that we have real issues to solve to be able to see this market take off in a more meaningful way.
Oh, thank you. Very, very, very insightful. I think we're short on time this morning, but I think CARAIA is a perfect forum and investment vehicle for us to network, to share ideas, and to expand on some of these topics. And in that vein, I'd like to open the floor to the participants who are viewing as well, and have some of the questions raised. I'm going to ask Audrey to lead the Q&A session. So Audrey, can you kindly go ahead? And again, thank you to the panelists for that insight.
Okay, thank you, Justin. I'll just start with the first question. Every country in the Eastern Caribbean has a development bank. What role do you envision that these banks could play to strengthen the alternative capital market ecosystem?
So I could take that one. So right now, the World Economic Forum is teaming up with IDB Labs to explore the digitization of payments for Latin America and the Caribbean. They've done it in 5, and now they're doing it here. And I foresee that traditional banking, retail products will become very digitized, and payments will become digitized. In a similar vein, the CDB, IDB, and these other multilaterals can play a role in providing, a level of financial support in tiering investments in, is it a startup, is it a project, where they could improve the leverage of the project that would, to the extent that will allow more traditional investors to come in until the level of risk aversion subsides in the region, sort of provide a sliver of safety in the interim via contingent guarantees or even direct equity. IFC and some of the other international organizations do provide that type of funding to provide a more balanced ratio on the capital structure to allow for wider participation until the region develops and becomes more in tune with taking risks. So not all investors are comfortable taking risks, as we see in Jamaica. And Barry speaking about the level of leverage being taken in Ireland because the market's more developed. So like a child requiring some training wheels to ride a bicycle, we may need some training wheels in the interim until we're able to ride on our own.
Okay, another question. What's the potential for private equity funds to develop deals investing in family companies, either with founder or inserting themselves into a generational succession?
Obviously, I'll take it for a little bit there, but obviously the private equity company is still up with its own charter. It really depends on what that is. And I suppose you're really talking about venture capital type stuff if it's going to be fairly small scale startup type stuff, and
or SME funds or growth equity, SME funds maybe, yeah.
Yeah, and one thing that actually stimulates a lot of this that you get in Europe, and in particular in Ireland, is we've got these massive tax breaks actually. So we've got something here in Ireland called the EII, and literally investors can invest up to 15 million euros. That's in the totality of the investment into a business. And the people who invest that's basically a tax write-off, comes directly off the bottom line, which for a lot of people actually is half the money they get back in in their either personal or corporation tax, depending on how it works. And that almost stimulates the entire SME sector, actually makes. And so there's a lot of these funds have developed actually, which are purely leveraging from the tax breaks from it. And the investors basically gain the benefit of these tax write-offs, which casts the risk effectively. But it's been massively popular, and in the last actually budget over here in Ireland, they actually doubled the amount, not half to, given that, of our actually workforce here, nearly 1 million of our workforce of 3 million are actually employed in the SME sector. It's that vitally important. So the government sees this as a good way of stimulating it. And it's probably a way that would actually, stimulate and drive actually these type of investments into these types of private equity, venture capitalized funds to fund SMEs going forward as well. As maybe as a contribution for and something that that could be lobbied for.
Mm-hmm. I think the questioner indicated that he was talking about parallels with the German or Italian family companies, which can be large SMEs. I guess the succession of many of what we now refer to as brand name entities, which were SMEs, but which were able to expand. And that potential.
So, I mean, I can't speak to what happened in the German or Italian context, but certainly in the local context, Stratos has been doing that. Recently, we would have partnered with what is now Stewart's Finance, and Stewart is actually one of the largest automobile dealers here in Jamaica, and we provide equity financing for them to assist them, in their growth prospects. So that is one way in which we have partnered with a traditionally, family-owned business, right, to help with their growth and expansion plans.
Right, and for those who are familiar with the Jamaica Stock Exchange junior market, a lot of the companies on the junior market were actually SMEs, family-owned businesses that would have received some amount of, coaching, governance, restructuring, and then it would have gone to IPO. It might not have been done through a private equity fund, but it was done through private funds. And then these companies were IPO'd. So that has spawned the growth of, what's the number on the junior market now? 40 companies or more on the junior market over the last 10 years.
Yeah.
So, pardon?
Yes, I'm confirming.
Right. So with that, I think it has been demonstrated that the potential is there to work with businesses that want to have that generational transition, but also even with the current founders want to be able to expand their markets, and I think it's been fully demonstrated. I don't see any other questions. I don't know if anybody else had any more. I know there was another one that was sent to me, asking whether or not we were working closely with support groups such as RevUp, which is a new accelerator, and other incubators that are helping startups. Just to note that we work closely with Jamaica's First Angel Network, First Angels Jamaica, which is also an associate member of CARAIA. So we are very much involved in what First Angels is doing. So I think we are, unless there are any more questions, I know we had slated to end this event at 9:30. So since I'm not seeing any more questions, what I will do is I will ask, well, let me just to say that it has been my pleasure to be hosting you here this morning, and this morning's roadshow. A lot of what we're doing will either be, sorry, I'm seeing another message coming in through. Okay, thank you. Thank you, Sylvia, for that message. A lot of what we're doing, we hope that this is just the start of the connections, just the start of the dialogue that is needed in our region, and moving beyond dialogue, because I think we're famous for dialogue, but we need, right, Gregory? And I wasn't saying that just about, I'm saying
Yes.
that about all of us in the Caribbean. I wasn't
Yeah.
talking about Trinidadians.
Yeah, and we need to have a call to action. You know, we need to get to go.
Absolutely. So
Just before you wrap,
Go ahead.
all I want to say was, I mean, I did listen very loudly to the presentation by Prime Minister of Barbados, the Honorable Mayor Motley, and the call for support globally. And I just wanted to say, as we have the audience, you know, over 2 years ago, I pitched a climate resilient fund in Barbados. It was under the auspices of the PM of Barbados, and the fund called for a pooling of climate resilient projects in Barbados and across the region, and getting participation from the sovereign wealth funds that grew due to the emission of fossil fuels over the last years, and getting the world and those guys to credit enhance the fund to allow for wider participation. So as we have the audience here, and I just wanted to table that we do have a lot of discussion, but we really need to come together with the brain power on this call alone to be able to make that a reality. So I just wanted to put that out there as an action item for us.
Yeah, and I'd also like to congratulate the panelists who have actually been doing. I don't think they've been conceptualizing. I mean, Barry has been doing, he's been deploying capital, Simone likewise, and Greg, we know that you're in the middle of everything. So I think we need to build on what we're doing, but I think there is action taking place, and we need to just build on the momentum and work together regionally, because regionally we can be a very strong force.
I agree 100%, Justin. Let's bring it together, everyone.
Yeah, just on your point there, Gregory, I also heard there that there's a new initiative to set up a new green bank there, and I've heard that Professor Avinash Prasad is going to be looking at it to begin with. So I think that could be a great innovation really for the whole sustainability drive in the Caribbean as well. And hopefully it could be a regional body. Obviously, it's the obvious thing for us to get that scale.
Absolutely, and I can't wait to see us push the agenda in this particular direction.
Okay, great. So I think Justin has said his wrap-up piece.
Yes, and I think we're moving on to the next section now.
Yeah.
Mindful of everyone's time.
Right.
Thank you, Justin.
So as I was just saying, we invite you to visit our social media pages and websites for information. And as we compile our research data, we certainly will be sending out information, but of course our members will have proprietary access. So keep watching this space. On that note, it's now my pleasure to pass on to our member from Trinidad and Tobago, Kevin Valley, who is founder and managing director of Aspire Fund Management. Kevin will give us his closing remarks. And
right, thank you, Audrey. And I think you really set the tone from the onset when you said that the public sector cannot run the private capital markets. And Chris Williams, took the mantle and he said, hey, the time is now. His Excellency, Dr. Didicus Jules said that he echoed Her Excellency, Prime Minister Mia Motley, when she said that banks need to stop saving money and start investing money. So we need to expand the private capital markets. And he went on to the next central point, saying that we want to make the Caribbean a premier investment destination. So with that, in Audrey's presentation, here comes CARAIA. CARAIA is here to take the mantle on to educate in the region about private equity and also getting that spur of investment flow and that spur of information into how to invest in private equity and in alternative investments. All right, so we then had our nice panel discussion moderated by Justin Nam. Thank you, Barry O'Brien. Thanks, Gregory Hill. Greg, salute to you always. And Simone Hudson Bernard. And now I just want to go on to some points of my own, right? So we've spent the morning talking about the importance of alternative investments for the region and what it can do for the region and what is the institution's role in spurring alternative investments for the region. But I want to kind of move it on to what are the business owners' roles. So I see we have some business owners in in the audience. I saw that we had the founders of Tech Beach, Kirk and Kyle, were there for a minute. So I want to talk about, well, first thing, businesses need to make themselves more attractive to investors, right? They need to really de-risk their investment case to investors. So how do they do this? First thing, they need to hone in on what are the problems their customers are facing and how do they create a tailor-made solution for the customers. What makes them the go-to guys to provide that solution to their customers? So do they have the right team? And this is from everything from onboarding your staff to how you communicate with management and long-term succession planning, because investors like to invest for the long term. All right, so how are you carving out your competitive positioning and your competitive advantage in your business? Have you developed and registered, and are you protecting your intellectual property? Or are you maintaining your supplier relationships, and are you diversifying your supplier relationships so you're not dependent on one or a few suppliers? And are you building strategic partnerships so that you can expand your product, your brand, your distribution networks? Because we are talking about, yes, we're from the Caribbean, but we're talking about competing internationally, competing on that global stage. So of course, within all of that, you want to make sure that you have those proper financial controls, those operational controls. You want to make sure you know your numbers, you have those policies, procedures, and systems that makes your business that much more efficient. And when you package all of that into a credible, defensible value proposition for financiers, for investors, then it's really tough for investors to say no. So I just want to really hone in on that. It's really about the ecosystem. And it's not just, okay, well, the bank's not doing their job, or the banks are too archaic. So as business owners, we need to do our part as well. So with that, I'd like to thank you all for your time and attention this morning. Thank you again, Chris, Audrey from CARAIA for having me. And I'll invite again, I'll echo Audrey's statements. Follow www.caraia.org, follow CARAIA on LinkedIn and Facebook. And with that, have a great Friday afternoon, evening, Barry, and a Friday morning to everyone else, and enjoy your weekend.
Thank you. Thank you, everybody.
Very much, everyone.
Have a good day.
Thank you, Audrey, for setting up. Thank you, Kevin. And have
Thank
a
you,
great
everyone.
enjoy your day.
Thank you. Take care, everyone. Bye.
Right, bye-bye.